China is starting to play a dangerous game. Apparently, they have seriously decided to take on the world economy in earnest and begin to reject the world's currency, the dollar. The world had not had time to recover from the pandemic. The economic crisis was brewing and, in general, things had taken a dramatic turn. And then war broke out. And as a result, the whole world began to restructure their economies, refusing to import Russian energy resources. It affected everyone, and it worsened the already heated state of relations between China and the United States. The struggle for the change of poles of power is constantly proclaimed in the information space, and things have only gotten worse and worse. And in addition to the chip war unleashed by the US, China began to buy gold and US debt. What? Why? To build up its currency gold reserve and increase the presence of yuan in the world, thus starting a war of dominance of the dollar in the world economy. And that's why China boosts gold reserves, fueling speculation on mystery in bullion market. Before we start, please like this video and consider subscribing. We put a lot of effort into this content. So, China's central bank, the People's Bank of China, PBOC, has reported an increase in its gold reserves for the first time in over 3 years, raising its holdings by 32 tons in November 2022 from the previous month, according to data on its website on Wednesday. The move has fueled speculation about the identity of the mystery buyers in the bullion market. China's total gold reserves stand at 1,980 tons, making it the 6th biggest central bank bullion hoard in the world. The gold industry has been abuzz with speculation over the central banks behind nearly 400 tons of sovereign purchases during the third quarter, with only a quarter of the buyer being publicly reported at the time, leading market watchers touting China and Russia as potential culprits. For China, the need to find an alternative to the US dollar, which dominates the reserves, has rarely been greater. Tensions with the US have been high since measures were taken against its semiconductor firms, while Russia's invasion of Ukraine has demonstrated Washington's willingness to sanction central bank reserves. The PBOC's purchase may be part of a plan to diversify its reserves away from the dollar, says Giovanni Stanovo, an analyst at UBS Group AG. Gold holdings in China as part of the total reserves are still meager, so there is probably room for further purchases down the road, he said. China has previously gone long periods without disclosing changes in its gold holdings. When the central bank announced a 57% jump in reserves to 53.3 million ounces in mid-2015, it was the first update in 6 years. It took another breather from the end of October 2016 before resuming reporting purchases in December 2018. While the central bank buying rarely drives sustainable gold rallies, it can provide an important pillar of support when prices fall. The precious metal has been under pressure this year from the Federal Reserve's aggressive monetary tightening, though it has held up relatively well against moves in the dollar and treasury fields. As deglobalization accelerates, the non-G10 nations are expected to recommoditize and ramp up gold holdings, says Nikki Shields, head of the strategy at MKS PAMP SA. The increase in China's gold reserves has caught the attention of the bullion market, and analysts are speculating about who the other mystery buyers could be. As deglobalization takes hold, it is anticipated that the non-G10 nations will increase their gold holdings, ramping up demand for the precious metal. Okay, so it looks like China is preparing for something and understands its own weaknesses and is making a bold step in securing its interests and gaining more money, power, and resources. Or is it? Is the US Treasury market and world economy in danger? The US Treasury market has faced several challenges, including mounting inflationary pressures and rising borrowing costs. The Federal Reserve's decision to combat inflation by raising interest rates has caused initial jobless claims to hit a 9-month low. However, this move has also increased debt servicing pressure on the already volatile US bond market. Recent economic data and headlines suggest that the Fed may need to raise the real interest rate to the level of inflation to achieve the inflation target of 2%. This has led to concerns about the US Treasury's future, causing some investors to seek other investment opportunities. China, one of the largest holders of US Treasury securities, has been reducing its holdings by selling up to 20% of its US Treasuries on a net basis, amounting to a total of $210.8 billion since November 2021. Its holdings of US Treasury securities have fallen below $1 trillion for 7 consecutive months. As the use of the dollar has a tool to limit the settlement of financial and commodity transactions in other nations continues, global investors in US Treasuries are cutting or abandoning their holdings. China has been acquiring gold reserves, lowering its holdings of US Treasury securities by $210.8 billion since November 2021. Gold is seen as a strategic commodity that can play a significant role during periods of volatile financial asset prices. International reserve assets have exhibited a clear tendency towards dollarization, which has reduced the danger of default growth. However, US Treasuries could lose their historic function as a safe haven when prudent central banks must address US debt risk. The dollar's position on the currency markets will be re-evaluated at that time, and its position may be severely weakened. In conclusion, China's reduction of its holdings of US Treasury securities and acquisition of gold reserves could be seen as a reaction to the challenges facing the US Treasury market. As investors seek safer investments during periods of volatility, gold is seen as a strategic commodity that can play a significant role in protecting against financial asset price fluctuations. So why did China do such a thing and also buy US debt? How is it? But why does China do such a thing? China's continuous purchase of US Treasuries has long been a subject of interest and concern among market analysts and policymakers. While there are several good reasons why China buys US Treasuries, the geopolitical realities and economic dependencies surrounding the issue have led to some interesting scenarios in the global arena. One reason why China buys US Treasuries is that they are considered to be among the world's safest assets, making them secure and stable. The US dollar also remains the world's reserve currency in international trade, so it allows the Chinese central bank to effectively hold dollar-denominated assets. China pegs its currency to the dollar, so it needs such assets as a way to maintain the peg. Moreover, China receives a surplus of US dollars due to the trade imbalance between the two countries, where China exports more to the US than imports. However, Chinese companies and their workers need to be paid in local currency, the yuan. As a result, the Chinese banking system must convert dollars with the central bank, which must then do something with them. The central bank then uses those dollars to purchase treasuries, which earn a stable return. But what would happen if China sold all of its treasuries? It is unlikely that China would sell its US Treasuries all at once because this would be economically painful for China and leave it holding dollars that it would need to spend or invest elsewhere. The most immediate effect would be an increase in interest rates on treasuries, since selling so many at once would artificially depress their prices in the bond market, thus increasing their yields. If the Federal Reserve were not to react at all to such an event, it is estimated that it would increase long-term treasury yields by 30 to 60 basis points. Despite concerns about the US becoming a net debtor nation, susceptible to the demands of a creditor nation, the reality of China's continuous purchase of US debt is not as bleak as it may seem. This type of economic arrangement is actually a win-win for both nations. For China, US Treasuries provide a way to invest its surplus dollars in a safe and stable manner, while also maintaining the peg to the US dollar. For the US, China's continuous purchase of treasuries helps to finance the US deficit and keeps interest rates low. However, the situation is not without its risks. If China were to stop buying treasuries, it would have serious consequences for the US economy. Interest rates would rise, the value of the US dollar would fall, and the cost of borrowing for the US government would increase. In addition, the US would need to find alternative sources of financing for its deficit, which could be difficult to secure in the short term. In conclusion, the purchase of US Treasuries by China is a complex issue with far-reaching economic and geopolitical implications. While it may be a win-win situation for both nations at present, it is important to remain vigilant and address any potential risks that may arise in the future. We are used to following the loud headlines and not reading the whole news, not to dig deeper, but simply to form our own opinions and move on. Because of this, we feel like we already know everything and the whole world is heading into the abyss. No, it isn't. Life is quite simple and complex at the same time, and the economy is even more so. And as paradoxical as it may seem, China is the first to have a vested interest in the prosperity of the United States. They trade with them, feud with them, and compete with them. At this point in history, that is the way things are, and nothing else. Thank you for watching this video. Subscribe to our channel and like it. More videos coming soon. Peace.